Okay, August 17th, 2025. It's Sunday, about lunchtime, Pacific Standard Time, and market massively strong still. Bounced off the 50 a lot of times, even on smaller time periods, when it's a trend trade, you'll see it wick just below the 50 RSI. And we're looking at a daily chart right now, but this could be a 2-minute chart also. And this is what the market does all the time. And it just kind of depends whether you're looking at a monthly, weekly, daily, 1 hour, 15-minute, 5-minute, 2-minute. But these patterns continually repeat themselves. You'll have, this map, these bull flags here. It'll break out, just be trending, trending, trending. And then it'll rinse out all the week longs. You'll have this base down here, that was like 62.40. It'll come down and just wick everybody out by like a point or two or 5 points or something. A great thing to do on chart time frames is to just put like a horizontal line here and then just put like a buy stop market in it when price crosses back above this. So basically it comes down, it rinses everybody out, and then it goes back up and it'll enter long and your stop will be, the low before here. And typically those have a super high percentage of being winners, unless we're in like a major downtrend, in which case the prices are going lower and lower. But if you had some kind of a trailing stop in it or something, or ATM strategy, you would lose very, very little. And that would just tell you something that the bounce level's not here and you'd have to wait for another lower level. So that being said, obviously back here in late July, we were, up to this 75 RSI reading. So pullback was likely. We're not quite to 70 yet on the daily. So I've got a couple things set here. You can obviously see this pretty big trend line here, which high probability is we're going to go sideways through it in the next couple days. So when we have setups like this, I'm going to look at the 1, 2, 3, 4, 5. So here's our 5-day low at 63.87. You can see back here 1, 2, 3, 4. It was 63.77, 63.72 to 63.80. Let's just call it. This area in here was quite a bit of resistance on the retrace. But as you can see, like a lot of these retraces, they'll rinse down and it'll retrace, and people are like, okay, it's going to go, we're going to short it again. And all it does is go make new highs on the chart. It does it all the time. So buy the dip is always my strategy. The sell fade can be profitable, and it has been for the daily chart, especially the last week, when the pops come from 5:30 to 7 and you get the full ATR of the day, and then it's just a trade. Then it's just a sell fade, and you almost have to wait till the close almost to just get the 10-point short closeout. That being said, here's our weekly low of 64.27. It wouldn't surprise me at all in the next couple of days that we touch that or break below it. So I've got, and then you can see these 3 days here where this 64.24 area was, and that's also the previous weekly high. So I'll be looking at a bounce level in here, and it also corresponds with the daily 8 EMA. So you have a confluence of 3 different major variables in here: weekly low, 8 EMA, previous resistance, and we're in the 30.6% Fibonacci retracement zone, which I call the pullback zone. Here's the 38.2, here's the 23.6, and I often look for something right in here when it corresponds like this. So this 64.24 area is going to be a bounce area for me. I'm expecting kind of a sell fade this week as we develop maybe come kind of a bull flag or a bull pennant. Um, in worst case situation, this could be a left shoulder. We're developing a head here. This is your neckline, and we're going to come all the way back down here, then bounce up and develop some kind of a right shoulder. But these bear patterns, they very rarely work out to fruition. Most of the times they're just fake outs now. So I'm constantly looking to buy the dip on levels. Typically, you're going to get at least 1 or 2 bounces out of them, and then it'll turn to a trend trade. Otherwise, it fails, and then I just wait for the next bounce level and then wait for it to turn to a trend trade because that pattern just continually repeats itself. So bounce levels for week of August 18th to the 22nd are going to be right below this, it's going to be this 6426 area. It's going to be just below the 20 here at that 6477 area. So write these down. It's just going to call it 6424 plus or minus 5. More like a minus 5 on that. Something like 6418 to 6424. And then the next bounce area is going to be 6374 to 6382. That's the next bounce area, and that's it for the if it's trading below the 60-20 moving average. Those are my 2 bounce levels for this week. If we get down, start getting down below the 20 moving average, then I'll be looking at, because you've got 1, 2, 3, 4, 5. 1, 2, 3, 4. So the rinse of the 5-day rinse is down in that 63.74 area right in here. And then that will negate this particular trend line, which is going to get violated. But then the next support is this trend line. And we're a long ways away from that. We'd have to have a pretty big pullback. But it only takes 2 days or some kind of news next week. And let's go ahead and see what the news is next week. I'm going to pull up the calendar. Let's do August 17th. What do we got? Let's do more. Okay, we got Fed meeting minutes 11 on Wednesday. Let's go ahead and write that down. 11 Fed. And we have 5:30 unemployment claims on Thursday. 6:45 flash manufacturing on Thursday. Write that down on the whiteboard. And then we have 7 a.m. Fed chair. We got the Jackson Symposium this week. And those suck for the market usually. Everyone creates a lot of noise, and then there's just noise all week about it. Blah, 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 blah. And that's at 7, and that's day 2. So Thursday's probably going to be one that people talk about a lot, and that there's a lot of blah, 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 blah on, and that could potentially move the market. So it could be a tradable day that day. And that might, let me see, so this would be Sunday. We got Monday, Tuesday, Wednesday. So it feels like a little bit of a sell fade all the way into Thursday. This is going to be a really balanced area. And then again, if we have like a, let's say we get some kind of reaction from unemployment claims, that's where you'll get your wick down, your rinse down into that 60, that could always be down to 63.68. I'm going to go ahead and adjust that 63.68 to 63.74. So again, backing up, I'm looking for a bounce level in here, 63.14 to 63.22. 63.14, 64.14, 64.14 to 64.23. So I'll be watching this area, and what I'm noticing, the way that the market's performing now, is that it's literally just like doing this. It's not really spiking down like I've used to see it. It does like this just trickle low fade, and then just like on a 10-second chart or a 3-point Renko chart, it literally just starts to recover like one moving average, just the 1 minute chart and the 2 minute chart, and it's really subtle. You really kind of have to just watch it on a lower time frame to like get a feel for it. There's no like, and then all of a sudden the 15-minute candle is a new high, and you're like, whoa, that's just happened. So you really kind of have to just park an order in there and give yourself, 5 to 7 point stop and sit there for half an hour. So those are going to be the levels for this week. For some reason that I just don't anticipate, with as strong as the market is, that we have anything that really gets down below this 63, 68 level. And, I'd be really surprised if the market closes below that this week. And let's go ahead and switch to a lower time frame. I'm just going to switch to 120-minute. So yeah, we're already kind of below the 120.50, and this is actually a 45 moving average. And the reason I adjusted it is because that's where it kind of landed on the daily. So yeah, we are in a sell fade right now, and the 2-hour RSI broke below the 50, tried to get back above it, and then it's fading down now. So that tells me we are in kind of a sell fade right now, like I talked about. So for you shorts, sellers, there's probably gonna be a little bit of a leak down again, and then we'll see where we get down into this area in here. Yeah, we might be, 100 points right now is really only like 1.5%. So it's really not much. But also, the market is so strong, there's so many buyers, that this kind of stuff is happening. You've got a wick down, and then it just literally turns into a trend trade for 2, 4, 6, 8, 10, 12, 14, 16, 18 for a day. And literally it's just, and then, so, it's really kind of a pretty challenging market to trade, as far as these are just shit patterns for yeah. You basically really need to be involved in these 2-hour candles. So this is getting pretty long, 15 minutes, but nobody watches my videos anyway. I just do them for me, and if they help somebody, great. But it looks like we're in a sell fade on the 2-hour market. Let's go ahead and switch to the 60. And we'll see where futures open up here in a few hours. But when the 60 starts to get down here below the 30 RSI, we'll start to get a bounce. And that's the other thing is when some of this stuff starts to correspond. The 15, yeah, it can't get back above the 50 RSI right now. So we're not done yet with this pullback. But the way that the opens are working is, or the and stuff, it won't. It likes to just rinse everybody out, and it just likes to go long and just rinse everybody out all the way up to, so you just can't stay short for very long in this market, and no one really is. It's more just day trader shorts. No one's like long-term swing trade shorting the market. That's just dumb. So, okay, this is over 15 minutes long. I'm going to call it. You got your levels if you had your pencil out. I'll replay them one more time. 64.14 to 64.23. 63.68 to 63.74. Those are the two weekly bounce levels I'm looking at. Trade them well.